Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Steve Meisinger, your host for today's ISE webinar. Today we have Dan Passarelli with us, and Dan will be talking about calendar spread strategies for FX options trading. Dan has written some books, and the most recent book was Trading Option Greeks, and he's has taught many students in options. Former OIC instructor, founder of Market Taker Mentoring, as he discusses, all these strategies. Really, when you think about it, he's doing this mentoring, he's doing one-on-one. So if you're interested in that kind of service, you might want to go to his website, and he'll talk more about this. But right now, he's going to be talking about calendar spreads and how we can trade FX options. Whether you have a bullish view, a bearish view, or even a neutral view, you can trade these FX options right through your equity options broker. So, Dan, thanks for joining us at the IC. Really appreciate it.
Thanks, Steve. It is wonderful to be here. Thank you very much. Thanks a lot. Steve gave you a rundown of who I am and what I do with Market Taker Mentoring, and if anyone has any questions, I think I have some contact information towards the end of this presentation. I'd be happy to talk to you about my mentoring or my webinar series that I have coming up in November. So today we're going to be talking about calendar spread strategies for Forex, for FX trading. So let's kind of jump into the presentation here. You, of course, ought to be aware that the ISE is gracious enough to hold these presentations so that people can learn a little bit about trading and have an opportunity to gain some knowledge and maybe get better at trading for no cost, and that's really a wonderful thing. And I just want to make sure everyone understands that that's what we're doing here. It's educational, and I'm not recommending anything here, and I don't talk about commissions or taxes and all that kind of business. I'm basically just trying to teach how options work. But apply a little bit of common sense if you use these strategies in the real world, and it's recommended that you read characteristics and risks of standardized options before trading. Okay, so the topic of today's discussion, as I mentioned, is my expertise lies in options, and I'm going to focus pretty deeply on how to trade calendar spreads in the context of Forex. But truth be told, really, you could use these strategies with stocks or anything else. So kind of have that in the back of your mind as we go through this presentation. There can be some interesting nuances to trading calendar spreads, specifically with Forex. But, this education that you get here kind of transcends a little bit of what we're talking about with the foreign currencies. Okay. So this presentation ought to go, I don't know, probably pretty close to an hour, I'd imagine. Like Steve said, I'm going to save a little bit of time towards the end of this presentation to answer questions. It's kind of hard to do during the presentation, but if you do have something that is kind of timely, I'll try and keep an eye on the Q&A block at the right-hand side of my screen, and that's where you can type in questions as well. Here's a list of what we have to talk about today, so we've got kind of a lot to cover. Okay, so I would imagine that many of you already trade Forex through the ISE and are interested specifically in this strategy. And for those of you who are familiar already with the Forex market, I don't have to tell you some of these things that I have here on the screen. What makes Forex kind of interesting is that it is really the largest forum for trading in the world when you consider all the different ways of trading it. You know, the spot market, right, which is fairly literally taking some dollars and exchanging them with another currency, the euro or Canadian dollar perhaps. You know, that's the cash market or the spot market. And then, of course, there are futures available, and through the ISE, well, you can trade options on Forex. And, you know, trading the spot market or trading futures, you know, that's what I tend to refer to as linear trading, and it's reasonably straightforward. I mean, if you're long the currency and it goes up, you make money, and if it goes down, you lose money. But with options, it's a whole lot more complicated than that. And that's why it's important to view some of these presentations and to really get a pretty good feel before jumping in feet first into some of this. Specifically in the options trading, there are a lot more opportunities available than just simply getting long or getting short. And one of those revolves around volatility. The Forex market, because of the nature of it, you know, with interest rate events that are often anticipated and sometimes not anticipated, the volatility term structure can make for some interesting plays sometimes. And one of the best ways to capture volatility term structure discrepancies is with time spreads. Now, I'm kind of throwing out a little bit of a fancy term here, the term structure. You know what? We're going to. I don't want to get ahead of myself. Let me save that for a couple slides ahead here. Now, I think that there is another slide towards the end of this presentation. I'll bet that Steve would be very, very happy to tell you about some of the products that ISE has available to trade currencies. And as I understand it, they just launched a little battery of new products that give you more flexibility in trading. So I'm sure you could talk to Steve, and he'd be happy to inform you about those. All right. Now, calendar spreads are an option strategy that, I think a lot of instructors like me sort of reserve them for intermediate level presentations. But, you know, I kind of like to start at the basics and ramp up pretty quickly. So if you're pretty new to options, I think that's okay. I think you're going to get something out of this, and I'm going to try and make it nice and clear so that you can have a pretty good understanding of calendar spreads by the time we're done here. And if you've been trading options for a while, I put maybe a little bit of a different spin on it than maybe you've heard other places, and I really focus on volatility. So I think that those people ought to find this interesting as well. Now let me start at the sort of basic building blocks here. A calendar spread is when a trader buys one option. Now it could be a call or it could be a put, and sells another option that is either a call or a put as well, that is on the same underlying currency, that has the same strike price, but is in a different month. So both options are calls, both options are puts, or both options are puts. Both options have the same strike prices. They're on the same currency, but they are different months. Now, I want to point out that it's very, very common for active individual traders, like many of the people watching this presentation, to buy the longer-termed option and to sell the shorter-termed option.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.